Yes. I don't think we're live. Okay.
In any case, quick thumbs up would be great. Sure appreciate
Yeah.
it. I believe we're back and live now. My apologies. We got buffered out of the zone again. If everything's up and running, it should be up and running on course right now. So let's get a shout out. If so,
Yeah, if you just get a thumbs up in the room, just check that we are coming through loud and clear, just so we can. That's good. Thank you very much, Baxter. Appreciate that, and
I
UKA as
appreciate
well.
that. That's
That's
fantastic. In any
good.
case, getting back to what we were saying about the mortgage applications, when you see a major pullback like a 14% over week, you can see that the buyers pool they're no longer interested in buying houses at these advanced levels. And what that means is that hawkish policy really is trickling through the entire economy, and that is the intended consequence, Nick, of these really I would say aggressive rate hikes over the
Yeah,
past 6 months. And as you just said with Mester coming out yesterday, that is not supposed to stop. So
that's
big
right.
picture,
Yeah.
mortgage applications go down, home prices pull back, leading indicator of an economic contraction.
You see, like, what are they actually going to do? Because those hikes now that we're seeing, you can see now there's a direct correlation in mortgage applications. That's going to affect house price sales as well, and the price of single family homes in the US is on the down low as well. So why are they maintain? What are they waiting for before they then say, okay, this is what we're going to do? Because it sounds like either they're not bothered about it, or this everything is fine, and they are, and there's some other plan. But there seems to be a slight disconnect now between how the Federal Reserve is posting what they're going to do with what those numbers are starting to show. Because you would be worried, wouldn't you?
Yeah, I think that's a major indication, and the real question is today's number. What's today's number going to do to the Fed? Is it going to apply enough pressure on the Fed to where we actually back off and pivot off this hawkish policy? Maybe all the saber rattling that we've seen since Jackson Hole, maybe that comes back a little bit and saying, okay, maybe we're just going to go up incrementally now, quarter point rate bumps, 25 basis points, something very conservative. I think that's a real possibility here, no matter how tough the talk is out of the FOMC members.
Okay, right. We're gonna just 4 minutes off then. We just check on the OBS if we've got uh, uh, the video muted. I think that's just coming
No,
through on.
we're live here, so
Okay. Okay, that seems to be coming through. Okay, so we are just now 3 minutes now before the actual number. So
yeah, the video's running again.
yeah, just give us a thumbs up. Check
All
that
right.
everything's good. That's good to see.
All
Brilliant.
right. In any
That's good.
case, we got three
Thanks very
minutes,
much.
Nick. You're going to get the number live right here.
We're going to get the number live.
We're
Yeah.
looking for a dovish at 250,000. We're looking at a hawkish 315,000, 290,000, somewhere in the middle. Do you have any predictions?
Well, I mean, this is the tough thing, isn't it? You know, I hate it. I always hate this because I always get it wrong. But I am gonna go with my gut on this, and I'm gonna. So many people criticize the Federal Reserve, but I always like bow to their superior intelligence, and they're a smart bunch of people. So I'm gonna go with their hawkish rhetoric. For me, I'm gonna go with something that's close to 315. I'm going to go more hawkish than dovish because I don't think that we've seen the downside yet in equities. So I think I'm going to go hawkish. I'm low to actually put a number on it, but I'm going to say closer to 315 rather than closer to 250. But famous last words.
There you go, 265. I think we come in very weak, and the political pressure mounts, and we hear a lot from the administration. As far as the dollar index goes, we really had a nice checkup at 110 this week. Really, as Q4 opened, the pressure, the heat was on the dollar. We saw a major pullback there. We've had a nice bounce since then, 112 right now. I'm looking for potentially another test if we do get that hawkish figure today on the 115 level. So I'm looking at last week's swing high.
Okay, we are nearly there now. Just listening out for the numbers. Here we go. $263.
Right on the ball there. What
Well
you
done.
got here is just a major hawkish reaction on that euro US dollar 1 minute chart. In one respect, we were looking for maybe a crack at parity here if that number comes in correctly. And the games begin, Nick. And the games
Yeah.
begin. The politicians will be out front here very shortly on this number.
263. Yeah. That is. We are definitely getting a hawkish reaction here, and euro dollar spiked lower. The dollar strength right off the back of that one. That dollar index as well pushing now 112.31 on the spot rate. I've got a level of 113.20 on the dollar index if we can get up there by the end of the session. But just that initial spike, yes, absolutely hawkish reaction as well off the S&Ps. Quite a seismic drop down from 37.46 right the way down to that 1% level that we drew on the charts this morning in the sessions. Just bounced right off it very nicely cleanly. 37.01.
I'm focused on 37.88 here. I mean, it's going to be a fascinating open. We're seeing big action in the futures markets right now. Still deep in the hole with that NQ though, about 1.25%. I imagine we make that up. We'll see.
Yeah.
We'll see how the bidding goes. I mean, this is going to be really a supercharged number when you come in low like that with the lower end of the spectrum. I mean, holy cow! I mean, the price action that we're likely to see, not just today, but going into Monday's session after the market gets an opportunity to digest, is going to be a very, very serious thing. So if you're trading today, watch your risk. Watch your risk on that U.S. Open. It's going to be a dandy. It looks like.
Yeah, I would tend to agree with you as well. I think there's definitely room for a volatile session off a number like that. Yeah, that's for certain. Yeah, I mean, it's you can always get. I mean, it's not a number that is like far out of the spectrum, but it's enough to sort of put the cat amongst the pigeons. I would say. Let's just have a quick check on the. Just keep a check on this. That unemployment rate 3.5, so lower. So there's a bit of a mixed bag there. We have not seen an uptick in unemployment itself.
There's your silver lining. There's your silver
Yeah.
lining. So it's going to be fascinating to see what the Fed exactly how they decide to proceed. All eyes are on inflation now that the numbers dropped. But for me, that's a very mixed bag. If we saw 3.5% down from 3.7, I want somebody to unpack those numbers for me. I want to see how exactly that's going to work. Let's see right here. Still looking at 37.88 to the top side here for the US 500, a nice weekly level. As far as the Euro USD, a 1 minute breakout potentially, maybe a pullback area right there at 97.8. We just got to wait and see how price action really unfolds. As far as the DXY goes, 112.50, really starting to break back to that bull. I mean, you got that 38% level at 112.06. You're back above that. So for me, that's a fairly bullish look. So I think your 113 level up near the top could definitely come into play. So it'll be fascinating what happens over the next 5 days, specifically with the dollar and it's early Q4 trials. Definitely made back those losses.
Yeah, very much. Yeah, dollar index. I mean, the beginning of this week, we sort of like nailed this support zone that we just traded into, and since sort of like Monday, Tuesday, we have just started that you can feel that dollar pressure coming back in, and that seems to be working at the moment. Little spike higher there. I mean, I like this 113.20 area. It's the move to the high up at 114.70, 114.66. I think it is a potential good bullish point to at least aim for, and then maybe get some rotation from there. Overall, I've still not changed my view. I am hawkish still overall.
Well, we'll see what happens. I mean, with the U.S. Open just T-minus about an hour away, if I was trading, let's say I'm going into intraday trading action on the U.S. 500, something like this, I would definitely have my 30-minute chart up, take a look at our lows, our NFP lows. We really washed out that overnight swing low there.
Mm.
Many traders, as they go in, they're going to strategize on an intraday basis and look to lock in at the bottom of this bar, or potentially at the short at the top of this NFP bar. So if you're trading those rotational type of strategies, just beware if you see compression in front of that low, or just below that swing high there on NFP, potentially a breakout situation. We've seen a lot of whipsaw action the last 2 days. Talked to a lot of traders that have really been challenged by that early session trading, trying to trade breakouts. So be very, very careful around those areas. If you're range trading and if you're a trend trader, you're probably going to want price to prove itself above or below those levels if you're going to take an intraday position. Remember, caution's the better part of valor. You definitely want to be cautious. You don't want to
Yeah.
just go running into these things headlong before the glut of volume comes into the markets.
Yeah, very much. I mean, it is like the biggest sort of like volume generator, volatility generator as well. Historically, that we have in financial markets. But that doesn't mean to say, particularly if you're new to the markets, don't feel that compulsion to just see something moving very quickly and then just feel that you're missing out and that you've got to join in. You don't need to do that. There's different ways of carving this. It's always better. In the workshops this morning, we put together a plan. We put together a point of view. Nobody knows exactly what's going to happen. No one can know. But what we can always do is go into these things with some kind of a plan, some kind of preparation, and that's always the best way to approach it. So you don't want to be that guy that, like as Kelvin always puts in the room for us, give back Fridays. If today's a Friday, you do not want to be giving that money back to the market on a Friday, particularly if you've had a good week. You don't need to be a hero.
Yeah, that's a fantastic point. I was talking with a trader yesterday, and he said, "Okay, I'm doing fairly well. I'm up about 6% this week." I go, "Good. Take a little bit of that home with you. There's nothing wrong with
Yeah.
putting a couple percent in your pocket. If you want to risk today, that's great. It's a great day to trade. I believe me, we'll probably be doing a few things later today. But if you had a great week, you don't want to give back. Give back Fridays. No donations. This game's
No.
difficult enough as it is. No
Oh yeah.
donations.
Yeah.
Just a quick look at crude oil here, Nick. I mean, it's just been an epic week. You're up 12.5%. You're definitely right at a key level for me on the weekly, right around that 89.51. It feels like, do we get a weekly close over 90?
I think it is highly possible. Yeah, it has. I mean, if you just look at it on a daily chart, just look at the way that those daily candles are stacking up. There's new money in on the CME overnight and over the last couple of days. That is put a solid base for me under 86.97 for me, a solid base. So as long as we're holding above there, I can quite easily see from here that we get a decent close over 90 by the end of today to end this first week of quarter four. For me, any upside targets there, I've got a feeling that I still want to see that 75. So for me, upside from here, I'm looking at and maybe ideally 92 potentially into next week. If we get that, I'd be maybe looking to maybe take some profits. I am interested I have got trades in crude oil. It's going to be the market that I'm going to be interested in trading for the rest of the year. That's for sure. I love the way that the picture, the landscape is now shaping up for crude oil, particularly with the fundamental drivers. That Russian oil cap is definitely not far away, but the numbers have not yet been defined. So that is going to be a really important driver of the crude oil market. And I think it's going to offer up some fantastic opportunities. I think 90 is possible as a close for the week. And I don't like it much higher than 92, not for me.
Yeah, I mean, I thought a key news story that we covered a little bit here in the room on the commodity stream Wednesday was the Biden administration stepping in and saying, okay, next month we're putting 10 million barrels out of the strategic crude oil reserve here, the SPRs from the United States. So for me, if we don't see a pullback here, if we don't see the institutions get involved to the short side and really trade down into this $75 range, I would say in November sometime when we're pricing D's crude and January crude, if we don't see maybe a yearly settlement somewhere around 75, I think 2023 is going to be the year of crude oil. If you think that it was high this year, you haven't seen anything yet. So for the short term, if I'm looking to trade crude today, that highlighted zone right there, 89.51, and then you've got your EMA up there at 89.92. Boy, to me, you can't really place enough emphasis on 90. I think a close above 90 is exceedingly bullish, and that's going into fall and winter seasonality. I don't know. I sort of going to reserve judgment on picking a direction in this market, but boy, this time of year we really should see some bearish participation. And if we don't, look out next spring. I'll be bidding it with bells on. That's for sure. Just a quick look at gold, and then we'll get on to our raffle. Sort of interesting price action this week. Really a nice move on that dollar weakness to really begin Q4. And when you're looking at about making two and three quarters in a week, not too bad. Where does gold go from here? I know you held shorts for a long time, Nick, and we're
I
on the
did.
short side of the market. Has anything really changed your mind long term, or?
No, not really. No, I mean, I've had a very sort of protracted gold short on which worked really really well, and it's basically made my year basically. So I'm very happy with my trade on gold. The reasons to come out where I came out, which was right at the bottom, were valid. I can see why we are rallying from here. I think there's more downside in it overall. Now, whether we rotate lower from here, I'm not too sure. I would like to see. I could potentially see another move from here back to the upside, up towards maybe sort of 1750s, maybe something like that before we rotate lower again. But either way, I am when I am trading markets, and I've done particularly well, I tend to like to just want to just put it to bed and forget about it and not really get involved, because there's always a temptation to look at a market where you traded and then think, oh, was I right or was I wrong? And and then look at what you could have made if you'd have held onto your position. That is always a really bad thing from a trading point of view. I try and avoid it. I think there's potentially more downside in gold if it does rally up to 1750, and we're sort of like maybe by Christmas, something like that. I would look at maybe trading it as a market again for a bigger picture move, but certainly not at the moment.
Yeah, I'm flat neutral here. I'm neutral in gold. Great lesson, though. Really a great point, Nick. When you start talking about getting out of the market, I was always taught that whether you took a profit or a loss, it's over. Once you're out,
Yeah,
it's over,
yeah, it
and you
really
don't want to
is.
jump back in and
Yeah,
chase money. And a lot of folks that are trading on short time frames, that's one of the things one of the biggest mistakes that's made. We find ourselves just making more and more trades because, oh, we made some money here, let's get in there. Next thing you know, you gave back everything you made.
yeah,
So
absolutely.
all right, let's sort of take a look at our raffle today. This is a Switch Market sponsored by Switch Markets, $5,000 raffle, 5 lucky winners. Best of luck to everybody. And here we go. Best of luck. $1,000. I wouldn't mind having an extra
Why
$1,000, Nick.
not?
Wouldn't be bad.
Yeah, it's a nice thing. If you get it, I think you had to enter it into a Switch Market. I think you had to register for a Switch Market account, and then you are automatically entered in. So good luck to everyone that's
Absolutely. BT King. Congratulations, BT King. Ronald S.A., congratulations. Cool grand. You can't beat that. That's not too bad of a little payday for a Friday.
Stan Rex as well. Congratulations to you. And last couple coming in.
Hamza SHZ. Some new names. I recognize a few, but I don't recognize all. So we got some new folks in the room. Fantastic. Well, you just made a grand.
Congratulations.
Ronald
And Ronald
S.A., he won
S.A.
twice. That's
Well
two
done to
grand.
you.
Geez, next time work for the sweep, Ronald. We take 3 out of 5. I think you win it all. Fantastic. Well, congratulations to all of our winners. Really pretty good stuff there. We always like to get a little bit of liquidity out there so you guys can trade with. So we definitely came in on the low end of the spectrum here. There's going to be a lot of heat on the Fed moving forward. One thing we wanted to talk about before we sign off here is our Academy to Funded Trader program. Really, it's an opportunity for you to become a funded trader, level up 50,000 to 2.5 million. One of the things that makes this program unique is you have 180 days to complete it. You get free access to the trading room and our learning materials, and you have an opportunity to interact with the community here. There's always a lot going on in the trading room and the live chat, and it's one of those deals where you can't really get enough viewpoints when you're developing as a trader. It's always great to talk with other traders. Yeah. I can't really speak for Nick when he started, but when I started, there was nothing in this landscape. I sat here just listening to music all day, and it got lonely.
Yeah, that's right. Yeah, yeah. I mean, it can be a very difficult journey, particularly when you start and you don't know where to turn to, you don't know you don't know which avenue to go down, and you need to be surrounded by the right people. And this is a fantastic community of very helpful people that are very supportive, and from the moderators, the guys in the room that do a fantastic job moderating the room. So we have a whole sort of like different spectrum of members. Some that are very experienced and very helpful to new guys, and then guys that come in that have never traded before, and everybody from someone who's just figuring out what a candle is and how the structure works, to advanced people that are wanting to sort of like trade market profile and order flow and that kind of thing. So we have a full spectrum, and it's a great environment to do it. And then if you want to take your skills, awaken your own natural talent, and then use that to maybe build a career, have the right expectations, you need the right funding, you need the right environment, and the prop firm that we have is exactly the right portal that can help support you and give you that chance at success.
Absolutely, and the biggest thing that we want to stress here is it's real money. And
It is.
when you get funded, and we have a few folks that are funded right now, doing very well, so we're happy about that. But also, it's real money. Your orders are going to the market. You're an asset to the firm, 70-30
Yeah.
split, and you're making 30% for the firm. So the biggest difference between this funded trader program and many others is that it's real money involved. It's not demo trading, and there is a tremendous difference. One, you're a liability; the other,
Oh
you're an
yeah.
asset. So
Yeah. Yeah.
definitely worth checking out if you're interested in getting some extra capital to trade with. And then we're very, very proud of our academy, Nick. It just went online earlier this week. It's got some great feedback. I've got a lot of private messages that
Yeah.
are absolutely fantastic. Tell us a little bit about the academy.
Yeah, so we're in the first inception, the first phase. The concept and the idea behind this academy is to really sort of like build a better platform for retail trading, put really good educational content together that is supportive of someone who actually wants to make a living at it, someone who actually wants to know what you need to know, what the expectations are, or how you actually build your own strategy, how you actually sort of like incorporate fundamentals and economics with different technical analysis tools, and how you bring that all together into one complete package. That's the aim of this academy. We've started now in the last 12 weeks. We've built the first phase. We've focused on what we believe are the two most important aspects, which is trading psychology and also strategy. Those are the cores. Now, we can't build the entire thing in one go. Because this is going to be a big project, probably in several years in development, but certainly over the next 12 months, it's going to grow pretty seismically into this time next year. But this first phase is just focused around those two core elements: trading psychology and strategy. And it's not just any sort of psychology. The way we are going to approach it is by offering up solutions, not just telling you that your psychology, that you need to trade with mindset. Yeah, you'll get that everywhere online. But this is different. This is about saying, okay, this is a specific problem that traders have. Prospect theory. Do you know about it? The Dunning-Kruger effect. Do you know about it? How do you fix it? What can you actually do to give yourself an edge over other people that are struggling? That is very, very important to us. And as we go into the next 12 months, that is the bit that's really going to mushroom out and really going to grow. So it's going to be a game changer. And the feedback that we've had so far is very, very good indeed.
Yeah, fantastic. I mean, like Nick said, phase one, this thing's an organic, living, breathing thing. So
Yeah.
if you saw the academy last month, you probably haven't seen the academy next month. That's for sure. Well, I tell you what, we want to thank everybody for joining us. I hope you're doing very well on NFP. Beware that opens up in about 45 minutes, 43 minutes. We think that it's going to be a big mover and a shaker here as far as making a market call on something, some of these equities. It's really difficult for me to say. I mean, the futures are just sort of mucking about, trading scratch really since before the release. I think we're going to see really some nice action though on the U.S. Open. So if you're trading today, remember we've gone over. Just watch your risk, have your stops down, leverage in check. Anything else to add, Nick? Or you think we're good?
I think we are good.
Okay, well, I'm going to pull my charts and get started for the day. I'll be back a little bit later today with a mid-session brief, and we'll sort of recap how the markets have digested this pretty epic NFP release over the past several hours. Okay, everybody. Until then, trade the action well. We'll talk soon. See ya.